What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over all the things you need to know for the week ahead. We're going to talk about SPY and some levels that we're watching, including price targets. We're going to talk about some stocks that we're watching as well, and we're going to include some levels and price targets for those as well. And finally, we're going to talk about some important economic reports and updates that we're getting this week from the Federal Reserve and the labor market. So we have a very busy week ahead, so let's go ahead and dive right in. We're going to talk about SPY first because SPY usually sets the trend for the entire market. On Friday and last week, we managed to rally all day up until the end of the week where we saw a little bit of profit taking. That profit taking happened right around the level of 408.16, which makes that the first resistance to focus on going into this week. So if we break above 408.16 this week, then we can expect to potentially move to a price target of 410 next. Now 410 is a level on which we got rejected out very strongly the last time that we tested it. You can see that after we tested 410, we sold off all the way to the lows of 380 and even to mid 370. So this level is going to be a very strong level that we need to break above. If we successfully break above 410, then we can expect to move towards 414.10. However, we can't expect things to be that easy this week, and that's because we're expecting earnings from companies like Apple, Amazon, Google, and Meta. These companies dominate the market, and since tech has so much weight in the market, if these companies don't report well, then we can expect a sell-off to take place, and that sell-off could easily break us below 403, lead us to these price targets down here. If we break below 400 and we can't quickly recover, then we can expect the sell-off to sharpen and we can potentially fall to the lows of 380, right around 385. So this week, as you are watching these earnings unfold, don't worry about what these companies did in the previous quarter. You should start looking at what they're projecting for the next quarter and even for the next year. Remember that markets are forward-looking, so they want to know what's going to happen. They don't really care so much about what already happened. So if Apple brings in a ton of great revenue last quarter, but they project very weak revenue for the next quarter, it is likely going to cause a downshift in the market and take us lower. Now, since market volatility is expected to be higher this week, option contracts will also be priced higher. So make sure you pay attention to implied volatility when you're taking on option contracts. If that percentage is over 60 or 70% of implied volatility, then that is a very high volatility for the option. We can even see option volatility increase to 150 or 160% this week just because there is so much going on. Now, apart from these earnings from these large companies, we're also expecting the Fed to speak. So the Federal Reserve is holding their first FOMC meeting this week, and they're going to bring us the next set of rate hikes. So remember, all of 2022, the biggest villain on the market was inflation. And in order to battle inflation, the Federal Reserve kept raising rates. Now, the Federal Reserve started raising rates in March of 2020. So since then, we've seen the market take a tumble. As rates went higher, the market went lower. And so now, 12 months later, around 12 months, is when we start seeing how interest rates are going to impact company earnings. So now that we're coming up on 12 months, these earnings and the projections that companies make from now are going to be vital in seeing how interest rates affected earnings after all. If interest rates are taking a heavy toll on companies' bottom line, that means we can expect the market to move lower once again, because remember, valuation is coming from earnings, and if company earnings don't meet valuation needs, then companies will shift lower to meet those needs and price companies properly at their proper valuations. Now, recent reports have shown that inflation is actually cooling. So that means on this meeting, in the FOMC meeting the Federal Reserve will hold, we're expecting them to only raise rates by a quarter point, otherwise as 0.25 BPS. So if we only raise rates by 0.25, it could mean that the Federal Reserve is taking a softer approach and it could trigger a market rally. Now keep in mind, the Federal Reserve can't go too soft too quickly because inflation can linger on, and if you go too soft too quickly, then consumer spending will just automatically pick back up and inflation will soar right back, which would be detrimental to the market. Now, last but not least, the labor market is going to be in the market this week as well. So when the Federal Reserve rates started to battle inflation, they also took on the risk of causing a higher unemployment. Now, since companies have had massive layoffs, unemployment is closely watched by investors. Our current unemployment rate is 3.5%, which is actually considered healthy. If we shift back above 5% at any point, which was the rate that we had in 2008, 2010, that was during the financial crisis of '08, we could move into a deep recession. But for now, we are looking like we're only going to experience a mild recession. In fact, our GDP showed expansion in our last reading, which means that we are going out of a recession. It could mean that the market had already priced in the higher interest rates and we are starting to be more bullish again. Now, us at Hyperstocks do expect one more leg down, but I don't think it's going to take us below 348. And if it does take us below 348, our next stop is going to be 325, but that is in the case that we see much higher interest rates. But if interest rates kind of stay the same as they are, right around 4 to 5%, then we can expect markets to start pushing back up. So now let's talk about the stocks that we are watching this week. All of the stocks we're watching are going to be option friendly, so you can trade options on them. In fact, we're going to give you a few examples of the different types of options you can look at. So the first stock on our watch list is going to be Baba, which is a Chinese company that has had a phenomenal couple months. We can see that Baba went from a low of 58 and doubling to a high of 118. So that means this company literally went up 100% in just a matter of a few months. Baba is on our watch list primarily for a bullish move, but we are open to both sides. Let's go ahead and show you the levels that we're watching on Baba. So let's pull up Baba's chart here on TradingView, and we're going to show you that we are looking at a high breakout of 121.30. The reason why is because that is the highest point Baba took on before getting rejected back to its 10-day moving average. So if we break above 121.30, we're expecting Baba to break out and meet its next resistance, which was the rejection right here back in July of 2022. That would be 126. So if we break above 121.30, our price target is going to be 126. Now, we're also looking at the downside because we don't discriminate here on the market. We look at both sides and we play accordingly. So we adjust accordingly. So if Baba happens to not meet our breakout above 121.30, we can look at it for a break below 115. If Baba breaks below 115, then our price target is going to be right around 111.50, maybe around 112, and we would play puts. So you can see that Baba, when we're looking at Baba and we're looking at February 17th expiration, we're giving ourselves 2 weeks because, of course, as we already mentioned, markets are expecting a very volatile week ahead. In fact, we can already see that higher volatility. So you can see that option contracts are trading around a 50% volatility, which usually they would be around 30 to 40%. So as we're expecting a higher volatility week, we're expecting option contracts to be priced a little bit higher. If we don't get a lot of movement this week and markets stay flat, then implied volatility is going to go down and it will crush premium. So keep that in mind when you're choosing your contract. So now looking at Baba, we can see that there's a lot more interest on the open interest for the call side. So you can see that there's 19,000, 13,000, 12,000. So that is a lot of people holding these contracts versus when we're looking at the put side, the open interest is nowhere near that 13,000 or 19,000. Open interest is actually much lower. Now, there is enough open interest on the put side to still consider that this can go down, but as of now, it's looking like a lot of buyers are interested on the call side in terms of where Baba stands. And now when we're looking at Baba here, we're looking at a price target for ourselves of 126, and you can see that the 125 call has about 13,000 in open interest. So we don't usually like to buy the exact one that has a lot of open interest, because what market makers do is they know that retail is holding this, so they'll move Baba to 124. So they really try to mess with retail traders, and they'll only move it to 124 rather than 125. So we're going to be looking at the 124 call for Baba if we do play the top side breakout above 121.30. Now, the next stock we're going to be looking at is going to be Cisco. Cisco is a company that has a ton of open interest that we like on its call side. You can see that Cisco for February 17, 2023 has 20,000 in open interest and 24,000 on the 5250 call. This is much higher than its put side, which makes it very attractive for a move above 50. So we are looking at a price target of around 51 to 52 on Cisco. These are the levels that we're watching. The level that we first need it to break above is going to be 48.75. If it can move above this level, then these are going to be our price targets up here. If Cisco moves below 47.50, then we're going to play a put side and we're going to be targeting these targets down here. Third stock that we're watching is going to be Coin. Coin, for obvious reasons, or Coinbase, is going to be on watch, and it's been on watch since last week. In fact, it hit our first price target since last week. You can check our last video if you want to see it. So Coin is a favorite of ours because right now crypto is rallying. So levels for Coinbase are going to be, let's take a look, are going to be above 62.30, we're going to 66, and below 56, we're going back down to 52. So as long as it's above 56, it means it's maintaining its breakout. So you can see that Coin here was struggling to get above 57 or so for quite a while. So our support is right around 56. You can see that it's gotten rejected at it about 4 times before finally on Friday it broke above it. So with that being said, as a buyer, you want Coin to stay above the 56, 57 area in order for it to avoid selling back down, because then that would mean that all the buyers that brought it up have already taken profits and the stock is likely going to go down to test 52. Now, last but not least, our final stock on our watch list is going to be Boeing. Boeing is a favorite of ours all of 2023. Their last earnings report did come in at a little bit of disappointment. We can see that it's flatlined since, but Boeing has been on an extraordinary rally ever since their last earnings. So Boeing experienced a very strong earnings, and since then it's been rallying. Their most recent earnings came in line and the stock just kind of stayed flat. For Boeing, these are the breakouts that we're looking at. We're looking at a breakout above 216.65, which is going to be the highest point that the stock made during this consolidation. We can call this a bullish flag, and then it needs a breakout above that level in order to move to these price targets up here, 220 and 223. If Boeing cannot sustain that breakout and it moves back below 207, which is this level down here, which we can see a very strong bounce happen from, then we can expect Boeing to sell off to a low of 201.65 and potentially even 196.50 if it moves below 200. So those are the 4 stocks on our watch list. Keep in mind, you guys, this week is a very, very important week. We have a ton that's happening, so you need to position properly. You can't let the market get the best of you. And if you don't know what's happening, just sit it out. You don't necessarily need to be in a position. These are just preliminary stocks that we're watching. If the market opens Monday and we see a ton of unexpected movement, then we will just leave it alone and we will regain a strategy and then we can trade it from there. Thank you guys so much for checking in, and we wish you best of luck.